Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 29th of May and our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming out to us from Singapore. Vishnu, it's always great to have you on the show.
Always my pleasure to be here, Brian. Thanks for starting the week with me.
Now, Vishnu, the debt deal, as we all anticipated, would eventually get done. There's a deal on the table. Tell us more about this and how this will impact our markets and investors, including particularly emerging markets.
Sure. You are right. We did say that, it was unacceptable that the deal would not be done. So it was either going to come down to the wire or slightly trip on it. But in any case, we did see a deal at the end of the day. Nevertheless, we said the deal would be, or the path to a deal would be a bumpy one. And I think that condition remains, that qualification remains, because between having a deal that's agreed upon at the highest of levels and getting the 218 votes in the House and the 51 votes in the Senate, that's not, one doesn't automatically lead to the other. And so for that reason, between now and midweek or even late week, we might expect some, bouts of negative headlines. So at the very least, investors need to be braced for some volatility along the way. But that's really not the bigger issue. The bigger issue is once we come out of a deal, because where one might be tempted to prolong this risk-on rally, which is really a relief rally, not risk-on rally per se, but where there's the temptation to do that, the reality of it is that the liquidity tide would be swimming away from markets, in particular because the US Treasury will have to, issue a deluge of T-bills to restock their empty coffers. And so in other words, the US Treasury is going to be competing with the markets for dollar funding. And that means that the easy money to boost equities a lot higher and overall risk sentiments a lot higher, that is going to be challenged, if not outright impeded. And so that's the thing to bear in mind. A deal being done doesn't mean that as we come out of it, there would be no hiccups or bumps along the way. Our 2011 experience tells us that whilst the equity market recovered when the deal was done, it didn't regain its pre-deal heights. It remained fairly lower for a while. Interestingly, we saw the same thing for gold back in 2011 because of the liquidity being pulled out. We also saw at the time that gold prices came down. And so what we expect now is that the dollar will be slightly stronger because of all the funding demands for the dollar. We think liquidity will be tighter, and that could actually see some of the asset markets being softer, including EM asset markets. The other thing to take note is as we get out of this, the other part that emerges is a lot of the focus is going to start shifting to the June FOMC meeting. And the reason why there'll be particular focus on it is previously, prior to this, I think the accepted consensus was a pause. The Fed did say, look, they're open to a pause. But since then, two things have happened. One camp was betting very vigorously on a pause because they thought the debt deal won't get done. So perversely, the debt deal getting done means that you remove any of the restraints on the Fed hawks, whether imagined or real. The other aspect of it is we had inflation data in the US coming out a lot hotter, particularly the PCE, which is exactly what the Fed looks at closely. So now more than 50% of the markets are pricing in for a 25 basis point hike. What you're going to end up with is that the quantity of dollar liquidity is going to get tighter, and the price of the dollar is going to go up at the same time if the Fed does hike. So this type of backdrop tends to be quite adverse for risk sentiments and particularly EM markets.
And to home in on EM markets, one of the key things going to happen is central banks, especially around Asia, who have paused their rate hikes, would have to look at this very, very much more carefully and change their strategies.
You're absolutely right. I think there's a little bit of balking at this situation. So central banks will have to review what policies they might want to use. Some they may want to, correspondingly tighten their own liquidity so that you don't get that relative shifts in price where the currencies take a hit. So there are two aspects of it that they want to look at. One is a very much broader umbrella, capital outflow risks, and the other one is fairly more constrained. It's just dollar reactions local currency reactions to a stronger dollar. These two things will start to factor in more heavily for EM central banks, including here in Asia. And unfortunately for us, we're in a bit of an anti-Goldilocks where even though in Asia we are seeing some softening sentiments, being particularly export sensitive, we have seen the adverse impacts of the rebalancing of consumption from goods to services. So we've seen exports slow down. The anti-Goldilocks is the softening, activity and exports demand does not correspond to the Fed's worries about sticky inflation and their fairly strong services support. So the Fed is unfortunately going to be looking at reasons to tighten rather than reasons not to, whereas central bankers here are more tuned into downside risks of the global economy.
And the downside risk really are starting to become more and more apparent with numbers coming out of Singapore as well as Germany not looking very good.
Yeah, exactly. And unfortunately, we are still in a position where we may all be looking at the same things, but we're seeing different things. And that's the story with the Fed and EM Asia central banks. That's to say, we will not get a synchronization of the risk assessment for a while. And that means heading into the second half of this year, there's still scope for a lot of soft patches to come through. And the one particular risk that we bear in mind, apart from a stronger dollar, tighter dollar funding, is that in the US, two things could happen. One is there could be further credit tightening in the wake of all the regional bank turbulence. That's one thing. So credit will tighten. It'll take a while longer, but it'll come through. That's going to dampen activity out further and for longer. The second aspect of it is if the deal does go through, it means at the margin, there is some more fiscal constraint. Households will get fewer subsidies from the US government. And so the US consumer may begin to soften as well. But by the time the Fed sees this and gauges it appropriate to react to this, we would probably be late this year, which means to say we don't get any relief in the interim between now and late this year.
Now, final question, Vishnu. With the start of the week, what are some key events and data points we should be watching out for this week that will move markets?
After the hot PCE print in the US last week, I think markets will be looking at ISM services to see whether services index is strong, and as well as the jobs data that come out in the US. So that's what they are going to focus on in the US. In our part of the world, India's GDP is coming up. Bank of Thailand is out for a decision. We think the Bank of Thailand will hike. We think India's GDP will also accelerate. Both of these taken on their own without context seems to suggest that we are all on the same page in the global economy about very hot growth, but it's exactly the opposite. Thailand is a belated reaction and one that's responding appropriately to tourism reopening. It's not about unbridled optimism. And in India's case, the initial boost that's in line with the industrial activity pickup doesn't provide any buffer against gathering global headwinds, especially if it's dollar funding tightness. We've already seen initial signs of capital inflows, FDI flows into India starting to weaken. So no one's immune. I think it's still the seatbelt sign is still on, so we should still keep it all on.
Vishnu, as always, thank you very much for your insights. Thanks for coming on the show.
My pleasure. Thanks for having me, Brian.
I'm Brian Fernandez, and we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.